And welcome. It's Mary Ellen McGonagle here with your weekly MEM Edge show. And this is the show where we bring you where the action is in the broader market each and every Friday afternoon. So let's go ahead and jump in, take a look at what we are going to be covering here today. As usual, we'll begin by seeing where the broader markets closed. It was a rather myopic week, but it did end lower. So we're going to want to pay attention to support, resistance as we head into a very potentially pivotal week next week. From there, we'll take a look at some of the headline news that drove price action. And then also there are a couple of pockets of strength that emerged despite a pullback in the markets. I'll share those with you and as also explain why they're experiencing that outperformance. As for the headline news this week, we did see the ISM service sector. Now that's going to involve hospitality related industries, and it did rise in November. We're still in that phase where positive news relating to a potential economic expansion is negative for the markets simply because the Federal Reserve is on a path to reduce any economic growth, all with an eye toward, of course, reducing inflation. Another potentially somewhat strong number was the fact that factory orders came in, and they did rise in October. And then today we did get news that wholesale price inflation did increase here for the month of November. And then we also saw consumer sentiment tick up in November as was stated that inflation fears are receding. So overall, we did get somewhat stronger numbers than expected. And then overall, this week, the markets appeared to be consumed by fears of a potential recession. And then all of that, of course, in turn, had the markets trading lower. Next week, I talked about it being a potentially very pivotal period. Lots of very impactful news that's going to be released. First up is that consumer price index, CPI, very important data for the Federal Reserve in deciding their interest rate hike cycle and what way or direction they're going to take there. Also, the Federal Reserve will be hosting or having their meeting this week. And on Wednesday after that meeting, Fed Chair Powell will have his press release and his press conference, which will be very closely watched. We're on the lookout for wording, again, all about the interest rates, how quickly they will be increased, and to what extent and how long. Also, retail sales is due next week, and then a flash PMI will come out. That's another inflation-related data point that will be closely watched. So lots going on there as it relates to next week. And I believe another reason why the broader markets really didn't perform this week. So let's go ahead and take a look at where we closed for the week. This is the S&P 500, and we did see this index pull back. And ideally, what we want to occur from here is the broader market indexes to make their way back above these shorter term moving averages. So let's take a look at last week very quickly. We had that spike day after Fed Chair Powell came out and reiterated that the Federal Reserve is not against reducing the size of those rate hikes at their meetings, and that in turn was received very positively. This is the prior week or last week. So unfortunately, this week we gave back that particular gain and then some, so that we're now back below the 200. This green is your 10-day, and the purple line is your 21. So we're below these key areas of support potential, and now these moving averages are going to act as upside resistance. And ideally, again, we want to get back up above that 200-day simple moving average, allowing the S&P more freedom, not anything in the way of roadblocks as it relates to being able to trade higher. Let's take a look at the momentum here where we closed. RSI waffling here for the week, but we did manage to close above that 50, which is constructive. However, faster moving momentum indicator, stochastics, closed the week below 50. So very mixed, overall cautious outlook on my part. Now, we'd be remiss to not take a look at the NASDAQ. It did trade lower than the S&P 500 for the week. A lot of that having to do with, again, these recession fears and a move away from growth. So let's take a look at where we stand here on the close with the NASDAQ composite. We are looking at a pullback that in turn pushed this index below its 10 and 21-day simple moving average. And we're just now clinging to support at this red 50-day simple moving average. Ideally, of course, we want to stay above this key metric here. If we do break below it, we are going to have to look at the early November lows for potential support. On the momentum side, your RSI in negative territory as well as your stochastics. So while we did see a little bit of an inching upward toward the end of the week, overall, the tech-heavy NASDAQ is not looking constructive here. As usual, let's take a look behind the markets, and we want to see what's taking shape as it relates to these sectors and then sub-industry groupings. Quite importantly here is the fact that your sector and group affiliation of your stocks is going to have a huge impact on price movement within that stock. And of course, as always, you want to identify where that strength, that relative outperformance is so that you can participate in that, and all with an eye toward not just this week, next week, but moving forward beyond that. So here we have the 11 sectors within the S&P 500. I've gone ahead and added a relative strength indicator, sorted these sectors in descending order. And what we're looking at is a 2-month daily price chart view with a 20 and 50-day simple moving average. So up here in this upper quartile are your stronger areas of the market. This is not a whippy view. You're not going to see these sectors bounce around. It's going to be rather more orderly or methodical in the sense that you will see rotation as these groups potentially in the forefront move down to this weaker quartile, and then likewise rotation into these stronger areas. So what we can see immediately here with healthcare, utilities, staples up here in the forefront is this move into defensive areas of the market. And this is what we had been experiencing. Let's just take a quick look here at healthcare. One of the strongest areas, we turned positive back here with a move of XLV above these moving averages and then into a nice uptrend. Lots of dynamics taking shape within this sector. I do talk about it on my MEM Edge report twice weekly as far as identifying those pockets of strength and why they are experiencing outperformance. This is not only a defensive area, but we are seeing a lot in the way of growth, new FDA approvals, clinical trials that are being really well received. And such, the growth prospects for these underlying stocks are strong. Also, the sense that you will need these medical products, the drugs that are being produced, whether we go into a recession or not. So nice strength here in that healthcare space. From here, we can take a look at utilities, and it's been kind of a slow go, give and take area. XLU is the ticker symbol. This is that move last week with the markets. And since then, we've kind of bounced around here. This is an area where higher yields are being favored in this broader market, and utility stocks do offer that. And beyond that, really very selective as far as the names and the number of stocks that are in positive territory. From here, staples area, another strong group. This is one where the underlying stocks, we need only look at Kimberly-Clark, Procter & Gamble, and so on. They're coming in with really sound numbers. They were able to increase their pricing in the face of experiencing high inflation on their side. And consumers, depending on how loyal they are to a given brand, are not pushing back. So that's where the growth side is coming in. There's also that defensive side where individuals will still need their products that are being offered again, maybe not as robustly, but regardless of whether we go into a recession. So from here, we do want to, of course, take a look and pay attention to these weaker areas in the market. And for those of you that watch my show regularly, you will know that we had energy up in that upper quartile where healthcare is now for quite some time. Energy was at the forefront. But let's take a look at where we stand now. XLE is the sector ETF. We can see the RSI is now below 50 and trending downward. We've broken below key support. And then from here, we can see that your momentum is now in negative territory. So energy stocks are obviously suffering. And I will share with you, of course, one of the primary reasons for that as we move forward. So in between here, we do have the technology sector. It did outperform the broader markets by a little bit this week, but we want to pay attention to this sector chart because we are still residing below this 200-day simple moving average and rather kind of sideways price action on that RSI. Here we have the MACD, but they are both in positive territory. There was one bright spot here that I will share with you as well as we move forward and why. So from here, I talked about the concept that this past week, we did see a move into growth stocks. Away from growth stocks and toward these more defensive, higher yielding areas. So from here, let's go ahead and take a look at those mega cap FAANG stocks. I'm still calling them that, even though Meta is no longer Facebook. But the point here is that these larger mega cap growth stocks have really underperformed this week. We can look at Google down 7%. Tesla had a little bit of a rally today, but also down 7%. And oftentimes, if we do see a move back into growth, potentially if we see numbers relating to inflation that are lower than anticipated, investors will often enter into these larger cap growth names as a proxy to get in to that any potential move into growth. But this week, underperformance being highlighted by these larger names. Netflix is the only outlier, up about a little over 1% this week. So one other area that I did want to share with you that I think really exemplifies this move that we are seeing into these safer haven types of stocks is a quick look here at these dividend aristocrats. And these are companies that have offered or increased their yield every year for at least 25 years. So in essence, you have some solid companies in here. The ability to increase their dividend means that they have solid balance sheets. And what I did from here is take these 64 stocks and again, added that RSI, sorted it in descending order so that you can really get a sense of the outperformance that has been taking shape among these more safe haven blue chip type names that are offering dividends. And if we take a look at the representation here, we can see I talked about Procter & Gamble, Kimberly-Clark up here at the forefront, but we do have ABBV, which is a pharmaceutical large cap name. And just taking a quick look, you can see the sharp uptrend that is taking place and has been among these stocks. APD I wrote about last week in my MEM Edge up here in articles, the concept of this gap up into a base breakout that can lead to a nice significant uptrend in this basic materials name. So as we move down, sharing with you some of the other areas within healthcare, really pointing out to you names that are looking very interested in an otherwise tough period this week. This is Becton Dickinson. This is a large medical products company that had this move up above this 200 on earnings, pulled back with the markets this week to its 10-day moving average, but is now back up above that 200 showing constructive price action. From here, of course, you do, as always, want to be aware of those weaker areas. But as we move forward, it's always of interest, certainly to me, to have a watch list of names such as Abbott, Labs, ABT, just on the cusp of potentially breaking above this 200, which would be quite constructive, particularly if it occurred on volume. And then from there, as mentioned, you will want to, of course, be aware of some of the potentially weaker areas down here. Walmart beginning to potentially roll over. Now we have that momentum in negative territory. We'll get into what took place in some of the other retailers this week as well and why. But I talked about these energy stocks down here, and here they are at this bottom quartile with Exxon, bellwether name, now below 50, as well as Chevron. So that's a quick view, but again, hopefully you can see and sense the clear-cut outperformance that has taken shape among these more blue chip names. They're offering a yield, and many of them have growth, both going forward and recently reported. So from here, I did want to share with you pockets of strength that are in the markets this week, and then a little bit last week as well. So we are seeing a nice continuation rally. So the fastest way for me to share that is to show you this particular view of the metals stocks. This is a daily price chart view, and we can see up here in the forefront, gold and silver, platinum picking up as well as copper. And so this is one area that has been experiencing strength. We can see silver had a nice rally last week, and then a continuation rally after a 2-day pullback on Monday and Tuesday. So what we can take from here is this move into particularly silver is very much related to the move into Chinese stocks. Now, this week, China is continuing to ease their COVID lockdown. So in turn, we did see China's stock market up about 2%, not particularly healthy. But overall, the fact that China and their easing of COVID restrictions, there is anticipation that there will be increased demand for metals. China is one of the top importers of this particular metal. I did mention to you gold as well. So one bright spot that I can share with you. Let's take a look from here at another area that we can look at. However, I would be remiss. We did talk about XLE, the fact that energy is now in a confirmed downtrend, breaking below key support on very heavy volume. Let's take a look at one of the metrics. Actually, this could be an easy way to do that here, as well as we take a look at energy. And this is quite simply the price of crude oil per barrel. And we can see significant deterioration. Brent crude oil is now at the lowest level it's been this year. So that's quite negative for these energy stocks. And then also that WTI crude as well. So from here, I am going to share with you other bright spots and share with you also the key driver of those bright spots. So I'm going to go ahead and take a look at some of the companies that reported earnings. Now, earnings season, for the most part, is over. We do still have rather impactful names reporting. It's rather sparse, but enough so that it's moving other stocks in that group. So first up here is Campbell Soup. CPB is the ticker symbol. We can see this gap up. The company not only came out with strong earnings, it also guided their estimates and their growth prospects higher going forward. So I'm imagining as we enter the winter period, their well-known soup and among other products is really picking up in demand. But when you see this gap up, and this is what I wrote about in my report or in my article on StockCharts.com's website, when you see this gap up on earnings that then pushes the stock into a breakout of a base, and it occurs on big volume, many times that can lead into a nice confirmed uptrend. That's what we saw with APD, which I shared earlier. And then, of course, the move into other staples stocks continued this week. Let's take a look at another impactful company that reported this week and then also had a nice trickle down effect into other areas in that group. This is Broadcom AVGO. They released their earnings after the close yesterday. And again, we can see this gap up. The stock was up about 2.7%. But when you're looking at these gaps up and really any kind of positive move on earnings, you will want to make sure that the volume is there, particularly on that gap up. That's indicating accumulation. It's going to give the stock more oomph to potentially trade higher. We did gap up into a base breakout, and I'm wondering if we closed just a bit below that. But very constructive behavior from Broadcom. They did have solid earnings, 34% year-over-year earnings growth. And I mentioned that trickle-on effect because semiconductor stocks this week were down less than 1%. We can take a quick look at that ETF for semiconductors, SOXX. Not overly exciting looking, but certainly not trending downward. We're more of a sideways price action here. We'd like to see a move above that 200-day simple moving average. I'll just share with you a couple of other names that are seemingly on the move within semiconductors. This is NVIDIA. And I'm going to mark this up and share with you this flat base formation that has been forming here of late. And what we are on the lookout for, well, that will work. So here we are. I'm pointing most to this point here from the beginning of November, this back and fill formation. I will want to move that up. And then a move back above this high from last week. We are in the beginning stages of experiencing that. We will want to see it occur on high volume. And then your outside momentum is positive for NVIDIA, which sets it up for success and a potential move back above that 200-day simple moving average. One other name that I want to share with you in the semiconductor space, these are names that are on my watch list, so that when the group turns positive, these are going to be most interesting to me. This is KLA Corp, KLAC, another name that had a really expansive move here from 250 up to 380, and now it's digesting that big move with this back and fill price action, flat base formation. And again, if we can get a move above the highs here on big volume, we could easily see potentially another leg up. Another big name company that reported earnings this week as well was Costco, and they came out with their earnings after the close yesterday. But here we can see the stock really pulled back, and this is because the company pre-announced weak same-store sales ahead of earnings. So in essence, setting investors up for the fact that they are not in a great position. So interestingly, online sales are down. The company did not report good earnings, but we did see a little bit of a bounce today, particularly because investors were prepared for that bad news. But overall, this move of a heavyweight retailer into negative territory could easily be pulling Walmart and other major names down with it. Another name that we can take a quick look at that had a spike up, a gap up on the news is DocuSign. They experienced 34% year-over-year earnings growth. And we can see that this gap up did push the stock back up above that 50-day simple moving average. That's good news, but we do still have more work to do. The company did rally today, 12% on very big volume. I would argue, and let's take a look at the momentum, RSI in positive territory. MACD had that crossover. We could see a rally from current levels up here to this 200-day moving average. But I would urge you, take a look at this potential downtrend reversal that took place in the middle of last month. Failed. Of course, this is related to earnings, so you would like to think it has more oomph. Let's go back to their prior earnings release, gap up above 50 and failure. A lot of that having to do with the industry group. This is IGV, the software ETF, really languishing. The overall group was down about 4% this week. So in light of investors' fears of an recession, you will see a pullback in these software names. Not all was good in the retail space. This is Lululemon. LULU is the ticker symbol. We can see this gap down almost 13%, huge volume. This is a case where this particular company was priced for perfection, and they did talk about their holiday sales not coming in as expected. They're not expecting overperformance, and hence the drop. So from here, your momentum has shifted into downward territory. So not looking constructive there. But we can also take a look at another retailer that's widely watched. It's a heavyweight in XRT, which is the S&P 500 retail ETF. Top online retailer. This is Chewy, CHWY, all about animals and only online sales. So we can see that it rallied 4% on positive earnings, but not the most attractive looking chart. Not a whole lot there to talk about, except the fact that they did have 113% year-over-year growth and 113% above estimates. Ideally, with that kind of bullish news, you'd want to see a gap up above these prior highs, and we're just not seeing that. Let's take a look at a couple of other names I did want to share with you. We looked at Lulu that had a big gap down. Let's take a look at another company that came in below estimate. They missed on their earnings, and we can see it experienced this gap down. But interestingly, it had a subsequent very sharp rally the next day. Will we see that with LULU? Hard to say, but I'm going to take us down to a 1 hour price chart for those of you that are super nimble, maybe shorter term, what to be on the lookout for a potential reversal. And we really haven't experienced it. This is a 1 hour price chart of OLLI. We did get that move back above the 5 and 13 hour simple moving average, big volume, but the RSI did not make it into positive territory. We did have that MACD bullish crossover, but still in negative territory. So subsequent to that, we did get a pullback today. The stock was down about 1.6%. So not quite ready for prime time, but was hoping to be able to share with you what to be on the lookout for. Let's take a look at another company that came in with strong numbers, and the overall group is looking really constructive. This is Toll Brothers. Home builders generally in the luxury home space. And we can see this response to earnings. And this is what you want to see, where the stock advances above recent highs on very big volume. Your momentum appear in positive territory down here as well. And there are surprisingly a number of individuals that are bullish on the outlook. Now, we have seen mortgage rates drop by at least 1%. Let's see if I can get those other ticker symbols up here in that same space. This is NVR, nice uptrend, finding support at that upward trending 10-day simple moving average. This is a company that is due to report next Wednesday, Lennar, LEN, and really sitting up here quite nicely. So we'll keep a close eye on how that particular area and group, if it can continue to outperform. I'm going to leave it there, everyone. I hope you have a wonderful weekend, and I'm going to look for you again here next Friday afternoon.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.